Okay, we're live. Hi, welcome everyone to today's webinar, which is the 2022 Digital Asset Outlook. So today's webinar, we're going to talk about all things crypto, what has happened in 2021, and what can we expect in 2022. So the topic today is going to be a little bit broad, but we're trying to cover as much as key areas within the crypto market, such as like multi-chain, metaverses, and a little bit about regulations. So the whole discussion should last about 45 minutes, and there'll be a Q&A session towards the end. So please kindly submit all your questions throughout the chat, and we'll do our best to pick up the questions and get them answered. So this webinar is actually in the conjunction of the blog research year-end report, which we published not too long ago. So we cover different key areas in crypto market. I think about like 8. So this is including NFT, blockchain gaming, Web3, and custodial institutions, also structured products, and macroeconomic trends. So the report will be available for you to download for free. So I'll drop out the link later on. So this is mainly thank you to GSR for making that happen. So I highly encourage for everyone to go and read it. So if you want to like know the whole crypto market and have holistic and a little more deeper insight, I really suggest you guys to go and read it. So today I am joined by 4 panelists and for various backgrounds. I'm so excited that they are here. So first is Rosenblum, the co-founder and president of GSR. And then we have Andy, the co-founder of Fractional. And then we have Luuk, the CCO of Deribit. And then we have 0xNGMI, the founder of Defillama. And I'm Erina, an analyst at the blog research. Welcome, guys.
Thank you.
Yeah. So I guess before we kick into the first discussion, I think it's everyone can just introduce themselves. Maybe like why you getting started in the first place, or what's your background, so that our audience can know you a little bit more better. Anyone want to start? Maybe
I'll
Rich?
kick it off.
Sure. Go ahead.
Yeah.
Rich Rosenblum, one of the founders and president of GSR, as I mentioned, got started in 2013, and we're largely a client-facing trading business. So working with most of the crypto natives in the space, issuers and exchanges. So even though at our heart we're an algorithmic trading firm, we're usually doing it with our clients in mind. So we're providing trading services, also have venture investment management, focus on DeFi as well as mining.
Yeah, I'll go.
My name is Luuk Strijers.
Andy.
Oh, sorry.
Go ahead, Luuk. No, go ahead.
Luuk Strijers. I'm the Chief Commercial Officer at Deribit. We are the biggest crypto options platform out there and one of the biggest derivatives platforms overall. I joined in 2019. Yeah, 2019. I was personally trading crypto before that, but never in a professional capacity. I was working for SGX at the time, the Singapore exchange, which is a large traditional platform. And I was very excited about the prospects of, let's say, a leaner, smaller platform focused on crypto and the amazing growth potential. So it was, a great change.
Let's try this again. I'm Andy. I generally go on most of my social media as Andy8052, where you might know me better. I've been a Solidity developer for like 5 years now. Spent some time on a bunch of different DeFi protocols and stuff, and most recently founded Fractional, which is an NFT fractionalization protocol in early last year.
Hey, I'm not gonna make it. I mostly just create a website that tracks TVL data for DeFi. It's called Defillama.
Right. Thank you, everyone, for the introduction. So to kick off the first discussion, right? So I want to know, for everyone's opinion, how much crypto has evolved throughout 2021, and which development do you think, do you find it the most surprising? Maybe we can start with Rich again.
Say the speed of growth in the NFT market was probably the sharpest. I think that we've seen, the DeFi summer. I think that NFTs take a bit more, to get your head around. I think DeFi is a bit self-explanatory, and it makes sense that it had this saturation in terms of liquidity. But the NFTs, I think, to get corralled that many different groups to be inspired and jump into the space, is a beautiful thing since we have so many new stakeholders. But I found it surprising how quickly it happened.
Anyone else want to jump in? Maybe.
Yeah, sure. I think there's so many things that happened, including NFTs and all the DeFi, new startups, the Solana space, etc. But from our perspective in the derivative space or in the option space, we've seen like an incredible explosion of open interest and volume, we've always seen that since, let's say, 2019. But last year it was spectacular. Which also paved the way for more institutional adoption. So the relevance of our options market was, in our perception, big in 2020, but in 2021 it was like confirmed by others as well, which was very important for us because that paves the way for future rollout of products and other stuff. New people coming in, a lot of macro funds, market makers, the spreads and liquidity is improving. And it's in 2021. It's been quite a ride. It's spectacular to see the number of new entrants. So that's an often heard statement, but it's really different from 2020 when the quality of funds used to be like smaller, new digital asset funds, etc., starting out in the crypto space. But now in 2021, it's really like the big funds, the existing multi-billion-dollar funds entering crypto, which is quite new, which also has a lot of onboarding stuff, which wasn't relevant in the years before, but it's changing the setup now.
Yeah, I think the NFT answer is pretty obvious, but that obviously has been pretty insane over 2021. But I'll say one other thing that I think took me a bit by surprise was how quickly kind of people became excited and active on alternative layer 1 chains and kind of getting into the active like DeFi spaces in alternative layer 1s. I was definitely a bit slow there to move, but I was very surprised how much capital was willing to bridge to all these different chains and start experimenting on places outside of Ethereum.
Jirax and Jeremiah, you want to add anything?
Nothing much. Just to reiterate on the old L1s. It's been pretty crazy. Like we've seen now at Defillama we've run like almost 100 of them, and they just keep exploding. We just keep adding more of them. It's never ending.
Yeah. I mean, I totally agree with all your opinions, especially like the rise of multi-chain is not just like within DeFi, right? It's just I mean, at first DeFi was on Ethereum, and then it spans out to BSC, and then Polygon, Solana, and of course, it just spans out more than DeFi afterwards. Like NFT as well goes to multi-chain, and we can also see the rise of the funding as well goes in different projects in different L1s as well. So my next question, right? So we can see all this rise of multi-chain. There's more activities in these L1s compared to the existing layer 2, like Optimism and Arbitrum. And our analysts have predicted there'll be more layer 2 coming out this year. So I just want to know what everyone's standpoint, like, do you believe in winner takes all scenario? Meaning like once this L2 coming out, or maybe ETH 2.0 merge coming out, do you think there'll be like going back to Ethereum, or maybe there'll be a single dominant chain, or do you have a different take on that? Maybe 0x and JMI want to start first, since considering you deal with a lot of multi-chain data.
Yeah, I don't think we'll see like all the capital moving only to Ethereum and all the other L1s just dying, just because once a chain has occurred like significant economic activity, it has been proved that it's safe and it's likely that economic activity will stay there. But like if scalability actually succeeds, I imagine like we could see a lot more capital flowing back to Ethereum.
Okay. Maybe anyone else want to take a different stand? Or
Yeah, no, I tend to agree with that. I think for a while I felt like there was going to be only one, kind of one winner take all chain for a lot of this stuff. But my opinion there has definitely changed over 2021. And I think a lot of that comes from you're almost seeing unique groups of people, or like, I feel like every major chain that has significant economic activity kind of has its own subset of users and people who are doing stuff. It would take a lot to kind of move them all to a different place. You'd need serious incentives to do that. And I don't know. I'm not totally convinced that'll happen.
right.
In addition to the incentives, I think that you just already have.
Sorry, Rich. Maybe your volume is a little bit too low. Is everyone else fine hearing him?
Oh.
Yeah, he is quiet.
Yeah. I think maybe it's not connected to you.
Shall I go in the meantime?
Yeah.
From our perspective, the chain is of course relevant from a user base, but as we offer derivatives on existing contracts, for us, the use case of the derivatives is more important. So we started out with BTC, we launched ETH, and what we saw is that once we launched ETH derivatives, and more specifically ETH options, we have options up to a year out, and the market maker coverage, or the willingness or the appetite to trade them up to a year out and provide market quality 24/7 it took us quite a while to build it. So we've always been quite hesitant in adding new coins, simply because the market demand, of course, everyone asks for new coins all the time, but the market maker willingness or ability to quote them up to a year out or 6 months is not there yet. And that has been changing recently when we've got like a significant push for Solana. So I think Solana is a new investment vehicle / chain is dominating, at least from what we see, the need for expansion. So at the moment we're building Solana support. So besides perpetual futures, we're going to launch options, which is quite exciting because there's like a lot of the entire ecosystem is almost begging for it. But from our perspective, it's like that one only. So BTC, ETH, and Solana, and the rest, even though technically they might be very promising, the demand from a trading perspective is far less.
Okay. Rich?
Sure. Can you hear me better now?
Yeah.
Great. I was trying to say that I think that different blockchains are often mission focused, whether it's on NFTs or gaming or transactions, micropayments. If it's going to be gaming or micropayments, you want it to be extremely low cost and very fast, because there could be, hundreds of thousands happening per second. But if it's going to be NFTs for minting on OpenSea, part of what makes it so that there isn't just zero curation is that someone has to pay to mint it, and it takes a few minutes to put it on there. I think there's different reasons why you need a specific blockchain for a specific purpose, and in the future, I think that it's not going to be winner takes all, but there's also going to be a lot of interoperability. So behind the scenes, you might be working with more than one chain in unison, but it'll all be behind the naked eye.
Right. So what I'm hearing from all of you is that every chain has its own user base, and it's, some of you think that it's unlikely they're going to go back to Ethereum, for better, faster, cheap transactions and different use cases, right? So in that sense, okay, do you think maybe in this year, Ethereum can flip Bitcoin and Solana can beat Ethereum, that kind of narrative? What do you think? Maybe Luuk, since you're, talking about Solana just now. Yeah.
So the flippening, or whatever you want to call it, has been much debated over the years. So let's define it from a market cap perspective. Who knows? We care more about a trading angle. So is there more appetite for trading ETH, for example, or Solana over BTC? And recently, you do see that trend. So the number of ETH projects and the need for ETH either to hedge or DAOs to hedge or investors to, let's say, speculate, is rising. So if you look at let's say, the ratio BTC versus ETH, and soon BTC versus ETH versus Solana on Deribit, and open interest outstanding or volume outstanding, that trend has changed. But it's not 50-50 yet. So we're definitely still seeing more BTC interest versus ETH, but who knows? So it's difficult to speculate. It's the flavor of the day. It could change tomorrow if there's a big announcement of some firm partnering in one way or another. But at the moment, we do see a trend towards ETH or Solana, and less so on BTC, but not like the flipping or the whatever yet.
Yeah.
Yeah, I'd say similarly, it's likely to happen, whether it's going to be a sticky flippening and it flips and stays there for a while. I think the space is so volatile and evolves so quickly. I do think that some protocol might jump above Bitcoin. Don't think it's going to happen this next year. Part of what happens is that internally it's easy to get bullish a different protocol. But if you look at the macro investors, they've really been extremely Bitcoin focused. And now in the past few months, you have these scions in tech that are back to touting the maximalist view. So I think that digital gold, inflation, is going to continue to be a reason why macro investors and the largest investors in the world are used to hearing about Bitcoin. It can take them years or more to get comfortable. There's more infrastructure in place. So even if I think it could be on the horizon, I agree it's probably more than a year out.
Yeah. Andy, do you have any takes?
Yeah, I tend to agree with that. I don't know. I think, like what Richard said, that the space is so volatile, and a lot of the valuations for these things are like super not fundamentally based on a lot anyways. So any one token flipping another at any given time doesn't, like in my opinion, actually mean that much a lot of the time. And so I wouldn't be shocked to see it happen, but I do think it'll still take some time. There's so much money that still is kind of ingrained in Bitcoin and Ethereum that seeing those flip by other protocols would require, I think, pretty massive changes in sentiment and like shifts in developers and stuff like that.
Yeah. Okay, so so thank you for the answers, right? So still staying on the multi-chain discussion. So obviously, one of the biggest reasons why people are using different L1s, and like we've seen, first start with BSC, is all cheap and fast transactions, but most of these L1s are not as secured as Ethereum. So, and obviously on Ethereum, any swap, like just one swap and even approval can cost you $20 to $100. So do you think, in order to like increase the retail adoption, do you think, it is necessary to sacrifice the chain security, over to have the fast and instant transactions? Anyone want to take it?
I'll grab that one. I'd say
Direct and Gemini.
Okay. I think we'll just see, well, this is a pretty blunt opinion, but I think we'll just see like different chains with different trade-offs. And it makes sense that to have like some things, just like on Ethereum, if you want like to have like really credible decentralization, or and some of the things that don't need it so much will just move to other chains.
Okay. Just now, who just now, I think was it Luke or Rich? Yeah.
Yeah, I'd say there's also a timing component. I think the trade-off is very clear now that it still exists, but similar to custody, how there's been an evolution through time. People thought it's going to have to take 3 days to take your value out of a cold wallet, and need to have a lot of different people involved, and it needs to be like Fort Knox for it to be secure. But that's not really how you would tolerate it today, and certainly not 2 years from now. It can be very secure, and while it might not take it might take more than a few minutes, it should be hours and not days. Similarly, I think some of these trade-offs, blockchains themselves are maturing, and new blockchains are coming out. I think that trade-off won't be as extreme as years past.
Yeah. Anyone else? Maybe Luke?
And for us, it's of course security is relevant, but we're not like a coin platform. We're not a spot market, so we support only 3 coins at the moment, which includes Solana. We're adding USDC, so that would be 4, which would be ETH based. So for us, security is, of course, and for everyone, is very important, but we're not really considering expanding beyond that by adding many more different protocols. So I think our assessment is slightly different. Of course, fees are relevant. We see the importance of fees every now and then when it really spikes. We see more and more interest in custody solutions. So we integrated with a few solutions where one of the biggest benefits would be the avoidance of fees. So if you have a, let's say, off-chain solution, you could move assets from Deribit to whatever platform without having gas fees or anything like that, which I think is a great value add. So there are ways to avoid those hefty on-chain fees. But overall, I think it's a good trend, but we're less focused on that.
Yeah. Andy, what do you think from NFT perspective? Does this chain security matter for NFTs, or it just doesn't?
Yeah, I think kind of like what has been said earlier, it depends on the user and the use case, and there's a ton of different things that kind of go into it. And so like I know some NFT collectors who really have no interest in buying an NFT that's not on Ethereum mainnet because of the security trade-offs and concerns they care about. But I know others who really, they want to buy like gaming asset NFTs and use them in a game. And so for them, buying NFTs on Solana makes way more sense, or any really fast chain, because that's kind of what they're most interested in. So I think we're just going to have different groups of people with different trade-offs, and doesn't make one better or worse than another. It's just kind of, choose your own adventure.
Right. Okay. So just now you were talking about gaming, right? And of course, NFT also is one of the key trends in 2021. I think a lot of people, use the word NFT, and then some people use the word metaverse, and of course the term metaverse itself became very popular after Facebook rebranded itself to Meta. But I think personally, I think metaverse is quite a cliche word to use. Maybe because everyone is from various backgrounds, I would love to know your personal understanding. What is metaverse to you guys? Maybe we can start with Andy then.
Yeah, it's interesting. I think like there's a good case to be made that kind of the internet is already the metaverse, and really what people are talking about when they talk about like going into the metaverse and building on or in the metaverse, it's just making significantly more curated and like opinionated ways of interacting with people online. And so like I don't think the end world of the metaverse is going to be one particular gaming engine that everyone goes to and that's the metaverse. But like Twitter is kind of the metaverse because it's a place you go online to make friends and talk to people and interact with other people and do some parts of your job. And so what we'll really see is these different companies and brands building things in the metaverse that are games and all these different interactions. And it's more just kind of continuing to bridge social interaction and like the real responsibilities of life from like the real world onto the internet into like the metaverse. That's kind of my take on it.
Yeah. Virax and JMI, do you have any personal view on metaverse?
I don't really understand what it is, but from what I gathered, it's the sort of like collective idea of sort of like social 2.0. But I'm personally, I think companies such as VRChat are much better positioned than or metaverse companies, metaverse crypto companies.
Yeah, totally agree. How about you guys, Rich and Luke? I know that you guys are more focused on trading, but maybe you have your own personal definition how you look at metaverse.
I think
originally it's a bit like. Go for it, Luke.
No, you go.
I was thinking that it's a bit similar to Web3, where initially it's this new term, and people knew what it meant, and they each had their own term for it. Now I think Web3 is really starting to solidify that it's the decentralized version of Web 2.0. I think similarly, metaverse, it's like, are we just recalling virtual reality a new name? Is there something different about it? And I think that there's some extra pieces to it. It's the advent of cryptocurrency, and I think stronger technology bring NFTs where you can own digital property and bring it outside or into the metaverse. So I think it's kind of like virtual reality 2.0.
Luke?
I tend to agree with that one, with the added value that you can combine, I think, worlds, which is not a single solution. It's gaming platform, it's social media, it's whatever you want it to be combined, where currently it's a bit more segregated. So I think the concept is still quite vague, but the potential, like NFTs, like real estate, like the concerts happening in the metaverse, but also whatever games, sport matches. If you happen to have your entrance ticket, you can be in the stadium watching some Super Bowl where Ninja Turtles are playing some match like Nickelodeon is reviewing. I think there's so much stuff that we all of us haven't figured out yet, but it's all to be combined in this to be formed world, which is, I think, hopefully much more than just a supermarket in a VR setup. So I think it has a lot of potential, but from the Deribit side is always tricky because it's more like a retail thing and less of an institutional approach at this moment. So we're not that much focused on it yet.
Yeah. So do you guys think that NFT or metaverse gonna continue to be a dominant narrative this year? Andy, what's your take? Or maybe Rich, either way.
Yeah, I think so. I think even more so than just like the overarching metaverse. I think we're going to start to see people actually kind of really nail down into particular avenues inside of kind of the more social side of blockchain in general and crypto in general. And like, I think all of that kind of falls under the idea of a metaverse. But yeah, I'm especially interested in following a lot of the gaming and more just like general gamification of a lot of our day-to-day lives and things that we have to do anyways. It feels like the metaverse and crypto really can unlock a lot there. And I think that's going to be very interesting to follow.
Yeah. Oh, I was about to ask Rich. She'll join us in a bit. How about you, Garrett and Jeremiah? Any particular opinion on that?
Yeah, sure.
Yeah.
So I think our society is gonna move towards more virtual, like the trend we're seeing towards like virtual will accelerate. We'll see more simping, more VR experiences, and more like people being online, and more parasocial relationships with like streamers. And I will see like probably a rise in VTubers and sort of like avatars. But I'm actually very bearish on crypto metaverse stuff. I think it will mostly happen as a evolution of society, and crypto will not capture part of it.
Yeah. Rich, I think GSR is, I think one of the strategies going more into crypto, isn't it? What do you think? Will metaverse and NFT gonna be continue to be a dominant narrative this year?
I think it's definitely yes. It's unclear, if it's going to keep the same type of momentum that it's taken, which would be pretty difficult. But I think it's hard to be number 1 or 2 story and fall to number 8. So I think just looking at a recency bias, I do think it's going to continue to be a big thing. Whether looking 3 years out, if NFTs in the metaverse are going to meet up to all the hype, I think that's yet to be said. And if you look at crypto in general, it's almost as if NFTs are the biggest form of adoption yet. We've had crypto for 13 years, and even if people have found ways to trade it use it as what you call a sport of value or a hedge against inflation. In terms of actually adopting something and having it be that it's tens of millions instead of tens of thousands, I think NFTs already have proven themselves in some ways.
Right. Yeah, just want to touch upon, like you guys mentioned, metaverse is like a social place and it's already is in some sort of way. But I tend to disagree a little bit. I think metaverse is more than just scrolling to your screen and then chatting with people. I mean, it is, you interact more. There's more screen time. Like there's more attention economy right now. But I think what metaverse is going to be in the future is that I think Facebook, Meta actually show that very clearly in how they use your senses, the augmented and VR. And I'm with you, 0x and GMI. Like I'm not at the moment. I don't really don't really agree with the current crypto. I'm not saying agree. I'm saying we're just way too early, because the AR and VR metaverses in traditional market is not even fully taken off. It has a bit of adoption. Obviously, Oculus has been like one of the top sold, to experience all this VR. But in crypto, I feel that it's just harder. I think one of the leading metaverse, so to say, is Somnium Space. But yeah, I think in 2022, the narrative is still gonna be dominant, but it's cool to see what you guys think. So I'm gonna tilt a little bit to a different topic, which is more of a regulation. So we know that there'll be always, I think this year there'll be new regulations coming in, whether or not it's like clamping on DeFi or like stable coins, or even more stringent reporting requirements for exchanges. So which regulation, or what kind of regulation you think will come this year? Maybe Luuk can start first from an exchange perspective.
So it differs which area you focus on. So there's a lot of stuff happening in the US where stuff like stable coins, etc., where most likely things will change. That will impact the US, of course, more than any other market, but it will also impact Tether, USDC, etc., in one way or another. But for us, we're unregulated. We're looking at should we get regulated, and if so, where? I think the most important non-US, or essentially also US change will be the travel rule, which is going to impact the entire crypto space once it's properly implemented. Anytime you would transfer assets from any exchange to another exchange, and it would require an exchange of KYC information, like an approval to send and receive information. You have to store it in a secure way. It's quite a significant change, and it wouldn't only impact exchange accounts, it would essentially impact all accounts. So if you want to book from your ledger to another exchange or another VASP, as they call it, like a platform, all of those transactions will be monitored in a way which is going to impact DeFi, of course, because the DeFi space tends to be non-KYC. So that one will have significant impact on all of us, and I think that's the clearest one. Of course, besides that, there's stuff happening on the trading space, custody, all of those accounts, but that really depends on where you're based. So Singapore has a lot of stuff which is happening, but if you're not Singapore based, it impacts you less. So I think the travel rule will be the clear and obvious one for all of us.
Right, Richard, do you want to add to that?
Yeah, I'd say DeFi is the main thing I think the focus will be on. If we don't see a change in regulations, we're going to see over $1 trillion at this pace of total value locked. And I think that we're starting to get to the point where, if it's 10 million, 100 million, people can turn a blind eye to it. But once you get to be at the type of $1 trillion kind of scale, I think you have to take a closer look if you're a regulator, especially in the US. So I think at some point in this year, we're going to get some more insight in terms of how the US regulators especially are thinking about it, and others likely to follow. But hopefully that is more in terms of grandfathering certain groups in, or having it monitor, take out more of the bad actor in the same way we've seen with ICOs, rather than trying to have more of an iron fist and squash out a lot of really good innovation. Because I think that in the same way people were scared of Bitcoin a few years later see it as this brilliant innovation, and you're pushing the envelope in a positive way for finance. I think that with DeFi, skirting KYC and regulations is bad, but I think some of the new technology around AMMs and the sheer growth level of varied participation and helping provide returns to unbanked, providing a lot of positive attributes as well. So I think it's in scope for a lot of the right reasons as well as the wrong reasons. I think they're going to get some more information on it this year.
Yeah. So you guys both mentioned KYC, right? So I'm curious on 0x NGMI take as being an anonymous. Do you think having all these KYC will, put a bit more cautious on your side? How do you feel all this security coming out as an anonymous?
Well, I think it won't matter that much, just because I think one of the main comparative things that DeFi has is that it doesn't have to deal with all the regulations that banks need to deal with, because it just destroys innovation. You just have to deal with so much stuff that it's impossible to build new things. And DeFi has that. So even if there's new regulations, they might just not get compliant with. So yeah.
Yeah. Okay. And Andy, do you have any takes?
Yeah, I tend to agree with what NGMI just said, that it kind of one of the cool things about building in this permissionless world is, even if say as a US company we have to KYC people who are using our stuff, someone somewhere is going to make something that doesn't require KYC. And even if for example, even if Uniswap was told, hey, you have to KYC everyone who uses the Uniswap smart contracts, they can't stop non-KYC people from using them. And that's one of the things that always gets me excited about crypto, and that's so interesting, is there's definitely, I don't know, it's a fun challenge.
Yeah, that's the beauty of decentralized. I feel I'm with you. Okay, I just one question. This is not what you guys saw, what I prepared, but stablecoin is one of the things that likely is gonna get regulated, right? Especially a lot of stablecoins are pegged to dollars. Do you think that will strengthen the current stablecoins, especially that supposedly have backing with the real dollars like USDC and Tether? And if you think, right, if you do think so, and will it, I don't know, this is a bit controversial, will it get replaced by decentralized stablecoins like MEME and UST, for example? What do you think? Maybe Richard want to go at it?
Sure. It's a hot button issue, since stable coins are extremely useful in the space. And for all the bad talk about Tether, it's been a very valuable asset so that people could stay in crypto but not have the price risk. And so that's why it continues to be one of the most traded. But I think transparency is the key. Whether something's regulated or not, people want to feel like there's safety. And if there's not one entity that's driving things, could still have transparency be something that is there, and governance will make sure that you're able to have it be one-to-one, or have some assurance that that you're taking the risks that you thought you were taking when you deposit your dollars or other assets. As far as the other types of stable coins, I think it's early. I don't really see why they would take over. I think that it's going to be somewhat of a bifurcated process, where there's a lot of people that are going to gravitate towards USDC, and they've got a ton of high value partnerships. And I don't think that the other types of stable coins are going to have that type of institutional sponsorship. But I think for DeFi or other uses, there's going to be financial incentives to use other types of stable coins. So you're going to continue to see proliferation of multiple types. But if there's going to be big changes, it's going to be groups that have come out and whether perceived to be bad actors or regulators come down on them. You might see their TVL collapse since there's so many other good alternatives.
Right. Thank you. And Luke, do you want to add anything to that?
Yeah, so we just announced that we're launching USDC support, and we've asked our clients, what do you want, which coin, and we had massive support for USDC. I think stablecoins in general are like one of the best introductions in the crypto space, because it really enables a lot of trading styles, but also the store of value argument, which Bitcoin might be lacking. So I think it's tremendously successful. On the other hand, I do support the feedback given by the market that there's need for more transparency. So whether that's rule-based by some regulator or simply from the company itself or the issuing entity. If you look at the ETF space, all of those products provide this daily statement of their holdings. So technically it's far from difficult, and I think it doesn't have to be daily, but something more frequent that shows how many dollars are there actually invested and how many other government bonds or whatever that might be included would be, I think, further strengthening the support for these coins. So it would further support growth, and the absence might trigger discussions that could easily be avoided. So I would be in favor of more transparency.
Right. Okay. Thank you for that. Okay, talking about like this transparency and stuff, it's harder to switch off to decentralized stablecoin. So I just want to like get everyone's thought here. I think it's very interesting how the financial market and the DeFi are working in parallel. Some people are just a little bit too, quite opinionated that the DeFi will replace TradFi, or do you guys personally think it will just go in parallel? I mean, there's CDeFi now, so what do you guys think? Maybe you can start with 0xNGMI or Andy.
Well, I'm very biased, but I do think that DeFi will replace CeFi, and mostly because like it has already replaced it for me. I just don't use any SEXs or any centralized exchanges or anything like that. I just mostly use DeFi just because it's way easier for me. I don't have to like deal with issues and KYC or anything like that. So I think we will move towards that.
But it should be a little bit difficult for you, right? Because like, if I don't know if you're 100% in DeFi, then the adoption in real world hasn't really, taken off in terms of payments. I mean, there is some parts of the world, but I'm not sure where you are right now, perhaps do support that. But do you think that eventually everyone will switch to this payment and DeFi will go on towards that?
Well, the payments use case hasn't really worked that well for crypto in general. For example, if you look at chains focus on micropayments or Lightning Network, it hasn't seen that much adoption. But still, like if you look at flows of money entering crypto in like some of these countries that don't have like good on-ramps, it's mostly like OTC peer-to-peer kind of deals. So yeah, I think like that could be DeFi.
Yeah. Just now, who wanted to add?
Yeah, I'm going to echo a lot of that. I think like for me, I definitely am very biased in that like I don't really use any traditional finance stuff other than having a bank account that I use to pay for my daily life. Outside of that, everything I do is with DeFi. I don't use any centralized exchanges or anything like that. So I'm definitely very biased. And to be honest, I don't really know what the answer is because I'm not exposed to the other side at all. I don't think I've ever owned purchased a publicly traded stock in my life. I like own private equity for investments in crypto companies, and that is like the extent of my like traditional finance exposure. And so I just don't really have I don't have enough knowledge of the other side to make a confident statement regarding the entire space. But I know for me personally, and a lot of my friends who are younger people who generally have spent most of their adult life in crypto and on Ethereum, it has actively replaced centralized finance for us.
Yeah. Look.
Yeah, I might be having the contrarian view here. I think DeFi and CeFi, this all depends on definitions, but DeFi is an amazing development. But in the end, if you look at size, if CeFi or DeFi is going to replace CeFi, you need to look at size. So if you look at the US stock market, if you look at let's say the real estate market, global real estate market, ownership titles of your house and a building and etc. If we're going to put that on some DeFi platform where all exchange of multi-billion-dollar buildings or real estate portfolios completely anonymous and non-KYC, that's never going to happen. And there will be regulators preventing that. So yes, there will be DeFi banks or whatever financial service providers for you to move some Tether or USDC around the world, which is simply your payment solution. But the big risky asset transfers or ownership where your retirement money, etc., is stored I simply don't believe that ever going to be anonymous, even though all of us might like it because we don't like the centralized say of any government or whatever. But in the end, those billion-dollar funds will determine or will make their decisions based on who they are facing, etc. So personally, I have difficulties believing that this will, on those levels, will ever replace the current infrastructure. I do believe that the current infrastructure will be modernized and will be making use of blockchains, etc. All of that is 100% certain going to happen. But whether that's completely anonymous on a DeFi protocol, I don't think so.
Richard, want to echo to that?
Yeah, I'm more in Luke's camp.
Mm.
I think that you have DeFi as a one drop of fresh water in an ocean of salt water. The size is really minuscule relative to the size of traditional finance, and I think people don't like the saltiness of having to give your name, having to go through a lot more scrutiny, pay tax on the money you make, but at the same time, as it gets bigger, it's going to be harder for it to retain its current form, and you're going to continue to have sort of dark markets in the same way you do in a lot of third world countries. People are doing nefarious things, but at some point they're going to have penetration by law enforcement of all types. So my view is that DeFi, you'll continue to have different realms of it, but ideally it's going to be complementary to traditional finance. So you're going to see the use of AMMs and some of these other tools that have been created, not perfected yet, but used in crypto. They get to be much more popular in traditional settings.
Right. Thank you, everyone. So before we go to Q&A session, if we have a little bit time, so maybe everyone just can go around and tell me your craziest 2022 prediction. We can start with Andy, maybe.
Oh, if it's gonna be my craziest one, I need a little more time. I got to think of something really out of left field here.
All right.
If anyone has an idea, feel free to go ahead of me.
Luke, do you have any craziest prediction?
No, predictions is predictions is difficult to say. We look at it from a risk perspective. So what if the following happens? Are we capable of handling that, etc.? So from a technical perspective, but also let's say what happens if Tether implodes and those kind of scenarios. So if you look at, we look at as a derivative platform without becoming too complex, but we look at implied vol, and implied vol is at its lowest at the moment. So implied vol essentially means what does the market expect to happen? Do we expect volatility to come or not? And implied vol is based on realized vol, is the market volatile or not, but also based on expectations. So what do the market makers, the people that price all these products, expect? And it's at its lowest point, which you might think it's extremely boring, but implied vol typically is mean reverting, meaning I think something is about to happen. It can't stay this low forever. So we expect volatility to come, and there's people in the chat asking for alpha. I think looking at volatility, how to expect the future to behave and when to buy or sell vol is a very important one. So there's lots of DeFi protocols being launched, option vaults where vol is being sold, and I think you need to be careful selling vol at this moment at these low levels, because the strikes, these typically deploy covered call strategies, the strikes they're picking to generate yield are closer and closer to the at the money levels, which simply means more risk. So be cautious in selling vol and consider buying vol. It's not really a prediction, but it's my assessment.
Yeah.
I have my crazy prediction ready.
Yeah.
I think that a DAO is going to form to buy something that's worth over $100 million. What it is, I don't know. Sports team, I don't know. But I think I think we're just at the start of this like on-chain capital allocation to buy things online with your friends. And as people make more and more money from crypto, they're going to start buying some really weird stuff.
Yeah.
They are right.
Xerox and GMI, do you want to add your craziest 2022 prediction?
I guess I'm gonna go for a pretty mild one, but I'm just gonna say like 1 trillion TVL.
Okay. That is still a crazy prediction, you know. How about you, Richard?
I'd say having the first Web3 social platform really take off in earnest doesn't sound that crazy, but I think the societal political implications can be pretty crazy. I think we've seen a lot of changes in terms of populist regimes. There's a lot of polarization within different countries, and I think having a social platform that's uncensored, I think, can have some crazy implications to the rest of the world.
Right. Okay. Thank you for everyone for all your predictions, and of course for the listeners, this is not financial advices to whatever you hear today. So we have about like 6 minutes before the session ends, so I'm just gonna pick few questions, possibly maybe two. So I think the first question is by Mir Yusuf Abdullayev, which is okay. What's your thoughts on the best ways for TradFis, like market infrastructure organizations, to contribute more in developing crypto ecosystem at this stage? I guess maybe Luuk or Richard can take this.
Sorry, the question is how traditional finance can contribute to crypto?
Yes. How can you be more engaging in developing crypto ecosystem, especially the TradFis, traditional finance?
I think there's tons of different angles you can answer this one. I think you see, from a trading perspective, you see a lot of traditional firms entering the space. So it helps out in liquidity for all of us. So they will start trading more, quoting more, generating volume, TVL, etc. So those guys are expanding into crypto. If you look at the exchanges, they are trying. So they're looking at creating digital assets, solutions, custody, etc. At this very slow pace, I have to say. But they do. Let's say, so from an infrastructure perspective, if you look at Nasdaq and Eurex and those platforms, they have considered a lot of stuff that we are still thinking of. So I think their knowledge can contribute to growth on a whole lot of different levels, and perhaps way faster in the crypto space than the traditional side. So I'll stick to what they've learned over the past decades that could be useful in crypto.
Richard, you have a different.
I'd say keep doing what they're doing. I think that 2021 was the year where we saw really VCs lean in a big way, and it's starting to be a good percentage of VC capital. I think towards the end of the year, starting to see private equity firms come in, but even though the numbers felt big to the crypto market, starting to feel the impact. I think that they were still just dipping their toes in. So I think this year is the year where private equity is really going to be diving in, and it's not as much that they had to take the blue pill. It's also that there's been businesses with cash flows, and they'd merit investments by the type of industry that private equity is, and why I think that that's helpful, not just because of the legitimacy it provides and the partnerships that it created, but also that sheer amount of capital is going to keep the system going. So many strong hires, people that are going to come into the space and be able to work in it because they're able to get the types of packages and incentives they'd feel like they deserved. I think that's going to be what's going to help crypto not have a deep winter. If we do have a macro scare, meaning macro outside of crypto, I think with all this extra inflows of capital, we'll be able to see it either be shallow or not have be a winter at all due to so much fresh capital.
Right, thank you. So the next question will be the last question. I think I will redirect this to Andy. So the question is regarding metaverse. So what do you think will happen to traditional gaming space? Meaning, like, why would someone want to like play Fortnite and not get paid, but now you can do the play to earn? Is it going to disrupt the whole gaming industry? This question is by Tom Gary.
So I guess I as someone who's really into NFT gaming and NFTs in general, I think I have a bit of a hot take here, in so much as I don't think so actually that much. I have yet to play a crypto-based game that is nearly as fun as my favorite video games. It'll take a very long time to get there. I think that right now we're seeing game development in the play to earn and metaverse space kind of start with crypto and then build a game from there. And I don't think that builds the most fun games. And so I think long term, we're going to see more and more of these gaming companies build a really fun game first and then figure out how you incorporate crypto into it. And I think that's a way healthier version and more sustainable version of kind of that whole development process. So like, I think long term, most video games will probably have NFTs in them and maybe some like smaller like micro economies, but I don't think that next month every single major gaming platform is going to be screwed because people can earn $5 a day playing some random PvE game on like some layer 2 chain.
Right. Okay. Thank you, everyone. I think that wraps up the whole webinar. Thank you, everyone, for being here. Yeah. Speak to you guys soon.
Yeah, thanks for having me.
Thank you for hosting us.
Thank you. Have a great day.